Stock markets are down, then they're up, then they're down again. These markets are more unstable than a Las Vegas stripper. But overall, the markets are down. But as you know, that means it is time to buy. So let's start buying some stocks and make some money. Where's my money? Welcome back to the MoneyBeard channel. I'm Rob Anderson, founder of MoneyBeard. Normally, we talk about how to help you make more money doing what you love, but as part of the MoneyBeard motto, watch it grow, I want your money to grow, which means sound, proper investing, which is what we're going to talk about today. So the market right now is exposing what sort of investor a lot of people are. And there's many types of investors, but especially for those watching this video right now, I think there are two main types we can identify. The first is the type that's been watching some investment videos for a while. Maybe they've gotten into the market a little bit, and they know that since the market is down, it is a great time to buy. They know this. They know more than the average person who's never invested before, and they see the opportunity right now to buy some stocks at bargain basement prices. And they know this. But they also let the fear of a 2,000 point single day drop in the market cause them to panic sell their stocks to avoid any further losses. Because, you know, maybe they're so new they've never been through a market downturn before. The other type of investor's been in the game for quite a while, and if this is you, your portfolio, it doesn't include hype stocks like Tesla or Canopy or Virgin Galactic. Instead, you've invested steadily in dividend stocks over the years. You've invested when the market was high, invested when it was low, and you buy and hold. Seeing the market go down right now lets you know it is a great time to buy. But for you, it's kind of always a great time to buy because you are rock solid in your investing habits, never deviating month to month from your strategy of continually purchasing well-researched, established companies that pay good, solid dividends. To make this easier for some of you, if we were speaking in memes, we could refer to these two investors as the Virgin Panic Seller versus the Chad Dividend Investor. You can pause the screen if you want to spend some time on this. Truth is, I'm a little bit of both, because at my core, I am a buy and hold investor. Some of my stocks I've owned for 3 years or more, which isn't even that long in the grand scheme of things, and I do not intend on selling unless I need the cash for a really solid real estate deal. On the other hand, I also own some very volatile hype stocks, if you will, such as Virgin Galactic, whoops, and Canopy. Whoopsie. But even with these, my plan is to hold them for the long term because I really believe, especially really in the case of Virgin Galactic, that company will go up over the next couple of years, eventually. Give it time. Here's the thing though, seeing the current volatility in the market, it is very easy to get scared and want to sell off everything to avoid losing more money. You see, it's easy to know that you should be fearful when others are greedy and greedy when others are fearful, as Warren Buffett said. But when you have actual money invested in the stock market and you wake up to find months of your investment gains wiped out in a single morning, you need to then truly psychologically fight off the urge to just sell everything to avoid losing more money. I want you to see what Peter Lynch had to say about this here.
You have to be able to have the emotional strength to stand the volatility of the market in general and stocks in general. The key organ here is not the brain, it's the stomach. Do you have the stomach for this? Do you have the patience for it? You should be able to look in the mirror and say to myself, what am I going to do if the market goes down?
And history has shown us that those who fight this urge will come out on top. When you feel this urge, this is when it pays to really dig in and maintain a buy and hold investing strategy for the long term, rather than panic selling because that sudden fear that happened when you wake up and see that the market's down 7% makes you feel like they're never going to go back up. You've lost all your money. It's never coming back. Wrong attitude. Regarding the current downturn, this is not the stock market's first rodeo. Good news, this is not the first time this has happened. It won't be the last. There will be other downturns. There will be other major drops in the market in the future. It's going to happen. In fact, there have been 25 major stock market crashes in the history of the United States alone. And you know what happened after that? After each one, the market bounced back and it soared to new heights in the years afterwards. Even better news for investors like us in the current day and age is that the stock market now has built-in circuit breakers to prevent the sorts of losses that we've seen decades and decades ago. Nowadays, when the market takes a huge plunge and it goes down 7%, one of those circuit breakers immediately kicks in and Wall Street pauses all trading for 15 minutes. This gives everyone a chance to take a break from the panic selling mode they're in, regroup, think a little more clearly so that hopefully when the market resumes trading, things are a little bit more balanced out. That's what we saw happen just a couple of days ago when the market opened to more than a 7% loss. That was not a good day, but it could have been worse. And in the case that it got worse, if the market ever drops 20% in a single day, Wall Street halts trading for the remainder of the day. They give everybody a chance to cool off. They tell everybody, you're cut off, go home, we'll pick this up tomorrow. Speaking of fear, let me just pause for a second and say that I believe the media is largely responsible for most of the fear and the mass hysteria regarding the coronavirus, and therefore the stock markets right now. Not that it isn't a serious situation, I don't want to downplay it, but you cannot turn on the TV right now without the media reporting a breaking news alert that there are 2 new confirmed cases of coronavirus happening in some county out in the middle of Nebraska somewhere, and then they'll bring in a talking head like it's one of the 3 ninjas from 1993 here to talk to us about what they think about the coronavirus. And then look at this news article and tell me, how much of a circle jerk do you think they had when they added killer into this headline? So yeah, I blame a lot of the stock market mess on the fear coming from the media. Here's the big idea of this video. If you buy and hold established companies over time, that's when you win. That's why if you had invested $1,000 into the stock market back in 1960, first of all, you'd be a boomer. Second, if you had kept investing $1,000 each year to the present day, you would have made a total investment of $60,000. But that $60,000 would have grown to be worth over $1 million today. All while riding out numerous stock market crashes, the dot-com bubble, the 2008 financial crisis, 9/11, and a bunch of other catastrophes. When you buy and hold good companies for the long term, you win. But you already knew that because you're the Chad dividend investor, aren't you? Of course you are, Chad. By the way, make sure you subscribe if you like this video, and like this video if you like this video. It helps me, it helps you get good information. It's win-win. I appreciate you.